Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has stalled as the rally looked above 71 cents and profit taking came back sharply and now sitting or hovering around 70.70. Looking ahead though, all eyes will be on the January inflation print for Australia, where a sticky outcome could revive March hike speculations, alongside Governor Bullock's midweek comments and multiple Fed speakers shaping the broader rate backdrop. Looking at the technicals though, from the top side rejection around 71 cents, the call I believe is still bearish and looking back to 70.5 to around 70 cents before the market is likely to reverse and retest the top side and reassess from 71 cents. The euro dollar is drifting into a holding pattern after Monday's upside attempts faded, while the broader recovery theme still appears intact towards the level around 122 to 123. That is broader, as I mentioned. With a mixed US dollar tied to tariff related reassessment, and along with that, the market is still a wait and see stance from both the Federal Reserve and the ECB to continue its reinforced as data driven range bound environments may continue for both the markets, that is for the Australian dollar and also for the euro dollar. Looking ahead though, we do get out of the US the PPI, where any upside inflation surprise could quickly revive the US dollar. Looking at the technicals, the market is somewhat mixed here at the moment. Still feel there is a bit of bearishness coming through, looking down to 117.65 to 117.20, and then from there we could expect the move eventually rebound and look back up towards the top side around 118 to 119. As we turn to dollar yen, the market still seems a little bit persistent in taking this market higher after rebounding off the midway points. I still view over 55 mark could actually see the risk of a bull trap and therefore, like previously seen, another down test towards the region of 151 to 153. Sterling, well, the market for the last 3 days has shown a bit of strength, but still not enough to punch through the 135.5 mark. I would like to see that cleared, but technically it doesn't appear to be that of the case, and therefore could see another down test to the lows of 134 before reversing. Wrapping up with commodities, well, what an impressive rally we've seen over the last 2 days, over 2%, as the market surges through the target of 5,100 to 5,200 and printing an intraday high of 5,249 before profit taking emerges once again. I feel there is still a little bit of a pullback coming into play here, but towards the lows around 5,150. If we see that again, like we did earlier, then we may see another rebound and look on, as there is still much geopolitical tension. Wrapping up with oil, well, the market's also finding momentum as it surges back. The call is still to the upside, anywhere to around $68 to $70 a barrel. As we can see from the recent strength, it's not backing down. And pulling this down a little bit, there is still room, as I mentioned, to this target at 70, as the technicals are still firming. So let's see how that progresses. But that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoyed a great start to the day.